Thank you for joining in. The webinar will begin shortly in the next few minutes. Good afternoon to one and all present here and welcome to today's webinar. Mr. Karan Batra, our Chief Product Officer, would be taking you across the Mojo professional features today regarding stock research, how does MarketsMojo analyze stocks, and also how can you make the best use of these features. Towards the end, you'll also be answering some of your questions, which you could drop it in the chat box or the Q&A section. Over to you, Karan.
Thank you, Jason, and good afternoon, everyone, and thank you for joining us today. As Jason said, I'll take you through the key features of MarketsMojo and how they will help you take the right investment decisions. And towards the end, we'll have a Q&A session. Q&A is, I would strongly urge that you please stay for Q&A, and it's usually very interactive. So if you have any doubts about any product on MarketsMojo, you have any query, or you want to know how to use any feature better, you can ask that on the Q&A session, and we'll try to accommodate as many questions as possible towards the end. Okay, so let's start. When making investment decisions, what are the key questions that come to everyone? Whenever we want to buy or sell, the first question definitely is what to buy, right? So which is the right investment opportunity? Which is the stock that is likely to give you the highest return going forward? That is the first key question that comes to anyone's mind. Second is when to buy. So even though the stock might be good, is this the right time to buy that stock? Has the stock already gone up a lot? Is there any future potential, that you see any upside in the stock? The stock is prime, so the stock is good, but is this the right price and is it the right time to buy that stock? And third, how much to buy? How much to buy becomes a very important decision because if you do not put the right amount behind the right stock, you will not generate the right returns. So, if you buy too little of the stock, then your portfolio will not give you the right kind of return. If you put too much, it will make it very risky. So these three questions really define whenever you're buying a stock or whenever any investment product for that matter. These are three key questions that you need to ask. But what becomes much more important, so there are a lot of people, even on television or the broker will always tell you what to buy, right? But no one tells you when to sell a stock, which becomes a key decision point because till the time you don't sell, everything is paper profit. It's only when you sell and the cash comes to your account, does it really mean, okay, you're generating that return. So when to book profits become very important. Has the stock run up enough, and is it the right time to book the profit in the stock? And why would you do that? Because you see other investment opportunities which are better. So is whatever you had to extract from the stock has happened, and now is the right time to book profits or not. When to book losses? Now this is a very key question which a lot of people don't like to do. People keep on holding on to the stocks that are down. So this is one of the biases that come into our investment. People tend to book their profits too early, and people tend to hold on to the losers for too long. Why does this happen usually? Because maybe you had an experience in the past where you were holding on to stock went up a lot, and you did not sell it, and then the stock came crashing down. So what happens is then next time, whenever the stock is up even 15-20%, we kind of book the profit and say, okay, let me take out my capital and let me at least book this much profit. Or people have this thing, okay, now the stock is down. I bought it 100, now it is at 80. Let it come back to its original 100 rupees and then I will sell it. But by doing this, by not booking the loss at the right point of time, you're missing out on other investment opportunities, because there might be other opportunities where you not only would have recouped your losses, but even made returns on top of that. And B, the stock is down for a reason. The stock is down because maybe the financials are not good or the technical parameters are not good. There's something wrong, and that's why the stock is down or underperformed the market. So the sooner you understand this and you take the right rational decision, all these are emotional factors that kind of hinder us. So as long as you can take objective, rational decisions, only then you can eliminate the biases in your thinking. And a very important thing is what to buy next. People, because they do not reinvest properly, even the earlier gains sometimes get wiped out. A lot of people would have sold off HDFC Bank to get into Yes Bank, right? So people would have sold HDFC to get into Dewan Housing. Same sector, but vastly different in terms of their matrices, in terms of the financials and technicals, because of which not even all the profits got wiped out, but you suffered losses even on your original capital. So all these questions, become very important. And that's where MarketsMojo comes in to help you take the right decisions. So, like I said, human emotions are the ones that hinder our rational thought process, because of which we tend to lose out. What MarketsMojo tries to bring in is discipline in investment. Take the emotions out of investment, look at everything objectively, and then take a rational decision. We do not believe in stories. We do not believe that, okay, the management has said this, or this is happening with gold prices, so this should happen, and then this should happen, and this should happen. No, we believe in what is there today is the entire truth, is the entire, the financials which are there today, the price movement, the technique which are there today will dictate if a stock is good or not. So we take away the emotions from investing and we only go by the ground realities of what is there. We always believe in creating a portfolio which is balanced so that you do not take unwanted risks. So people generally do not tend to create a portfolio. We just keep on buying stocks and our portfolio gets created. So the whole, our entire portfolio creation philosophy is you invest in the right stocks in the right quantity to achieve the right diversification, so risk minimization, and your return maximization goals. Very important. If you realize you made a mistake, now we can only, based on the information, try to pick the right stocks, but not every stock will perform the way we want, and sometimes the investment call might not be right. We need to realize, okay, there is a mistake. We need to close this call and go to the next best available opportunity. Again, taking the emotions out of investment. So invest in a balanced portfolio, invest in a disciplined manner over a long period of time. And if you made a mistake, move on. Book the loss, cut the, if you made the right profit, book the profit and move on to the next best opportunity. Now, these are the 5 key products of MarketsMojo that I will take you through. And I will show you how they work and what their performance has been so that you can, know how to make the right investment choices. First and the most important feature of MarketsMojo is the stock research. At MarketsMojo, we rate all 4,000 stocks across 4 key parameters of quality, valuation, financial trend, and technicals. The recommendations, or we come out with a call, which is on a scale of 0 to 100. We come out with a score, and accordingly, a call is generated from a strong sell, hold, buy, and strong buy. How do we do this? We rate every company over 550 different parameters, which translates to more than 30 million data points on a daily basis. The analysis spans across fundamentals, results, technicals, sectors, peers, price. And we've seen a very high success rate. Now, when I say success rate, our strong buys have done much better than the benchmark, and our strong sells have done much worse than the benchmark. So we see this at an overall level. Now, individual stock level, sometimes, it might be up or down. But if you see at an overall level across the stock, so, people might come and say, you asked me to sell this stock and now the stock is up. It can be up, but you also need to see the stock that we asked you to get into. What has happened to that stock? We do extensive back testing, extensive ongoing monitoring, uh, improvements in the product. And that's why we are very confident that, when we come out and tell you, okay, this is the stock you need to sell, this is stock you need to buy, over a long-term period, if you keep following that in a disciplined manner, we are very confident that you'll be able to beat the benchmark. But, individually, single stock, there might be some ups and downs, but you need to look at the big picture and invest for a long term. So now let me take you through a stock, and I will show you how to read these, how is our analysis calculated, what goes behind calculation of these analysis, and how you can make the most of it. So, okay, let me go to any stock. Let me go to maybe. Just any recommendation by anyone if they want to see any stock?
Yeah, if you'd like to research any stock, you could just put the name in the chat box and we could actually see that stock.
Or, let's randomly pick a stock for what has happened today.
Samara said Amara Raja Batteries.
Amara Raja Batteries. So Amara Raja Battery is a whole. So when you come onto a stock page, this is the first thing that you will see. So dashboard is the first level of research. The dashboard will give you what is our score on the company, which is out of 100. What is the call on the company? So the call on the company is hold right now. The dashboard on upfront will tell you what are the positive factors, what are the negative factors, because of which this final call has been arrived at. Now, this stock, Amara Raja, has a few positive factors, but the technical trend currently is bearish. So, there's a mix of positive and negative factors which are working, some is pushing it up, some are pulling it down, because of which the overall call on the company is hold. On the right side, you'll also see a verdict. Verdict is a real-time research report on any company. So once you see the stock page, there are many different sections on the stock page. What verdict does is, it will collate whatever is relevant for this particular company and create a report. So which is fully customized to this stock. So what are the relevant factors? What is the performance? Even the order of the pages of what is more important for the stock will all be presented in a report. Now, just before we proceed, the call on the company, the score, is only for our Mojo Professional subscribers. So the rule of thumb at MarketsMojo is wherever we are helping you take a decision, those elements are only for paid subscribers. But wherever there is analysis and you have to do your own research, those elements will be free. So the call on the company, the verdict, all these are paid sections. But the price movement or the analysis below is available for everyone to see. Now here, so the dashboard will also help you take key decisions in terms of how much you should hold and is this stock right for you, what is the risk and return profile of the stock. Now let me dive straight into the 4 key dots that we use. So first is the quality. Quality is the long-term fundamental strength of the company. When I'm saying long-term, so it's over 5 years. We don't look at, if there is the latest quarter is good or bad, or the latest 2 quarters are good, that the quality will become good. Quality takes time to improve. So that's why it's a longer-term strength. So company has to consistently deliver on its fundamentals for the quality to improve. There are 3 key factors in quality. The first is growth. Growth is again long-term averages and long-term consistent growth the company should have generated. Only then the company will come out as a high growth company. Now, the key factors here are sales growth, which is the top line growth, the bottom line growth, the operating profit growth, the margin expansion. So all these elements come into the growth factors. Second is the capital structure. Capital structure essentially is the debt ratios of the company, the debt levels, the debt serviceability of the company over a long-term period. Third and the most important feature of quality is the management risk. Now, people ask us, how do you measure management risk? Is it, do you speak to the management? Do you speak who's behind the company? No. If the management of the company is good, that will reflect in the numbers of the company. So we don't just say, okay, it's a Tata Group company, so it's a good quality company. No. If the management is good, it will reflect in the numbers. So if the management is good, the company will grow efficiently. The ratios like the return on equity, the return on assets will all be positive for the company over long-term periods. So management risk will have efficiency numbers. It will also look at are the profits of the company real? Is the company paying out taxes and dividends? Because that only can be paid out of actual profits, not just paper numbers. So are the profits of the company real? What is the level of pledged shares in the company? What is the level of institutional holding in the company? We also build in another factor of what is the holding of on-ground fund managers. What is the domestic mutual fund holding? We saw some time back there was a company, everything was great with the financials, but even the institutional holding was high. But the domestic mutual fund holding was very, very low. It was almost non-existent. So we thought, why is this happening? Is it possible that there is some round tripping happening, that institutional money is coming in, but that is promoter money? So there is the on-ground fund manager not investing in the company. So there is something which is not right. So we put that as another factor in the quality. So we have the company numbers and also these external parameters that we put in to make sure that the quality of the company is high. Now, quality for us is a gatekeeper. What I mean is, if the company is not at least a good or excellent quality, that will never qualify as one of our recommended stocks or a Mojo stock basket. So the company on its own has to be at least a good quality for even be considered as a Mojo stock. Second parameter is valuation. A common way of evaluating valuation is a discounted cash flow valuation method, wherein the analyst has to project what are the cash flows 10, 15, 20 years down the line, what is the rate of growth of these cash flows, and what is the discounting factor to apply today to these 15-year cash flows. Now, you see, there are so many assumptions that the analyst has to make. Wherever the assumptions are in place, there is always a personal bias. Even a 1% error in assumption will lead to vastly different outputs. So we do not put anything where there are biases come into play. Our valuation is a relative valuation method. We look at the valuation over three factors. The first and the most important for us is the fund valuation versus its own fundamentals. Our underlying hypothesis is, if the company is fundamentally strong, it can justify even higher valuation multiples. But if the company is fundamentally weak, it cannot even justify lower valuation multiples. So what I essentially mean by that is, we don't say that, okay, the PE of above 15 or 20 is expensive and below 5 is cheap. No. If the company is fundamentally sound, even a higher valuation number can be justified. So first is the relative versus its fundamentals. Second is versus its own past. So was the company always trading at a premium? Has it become cheaper versus its own past? And third is versus its peers. So combining these three relative measures, we come out with the valuation of the company. Quality and valuation together combine as the long-term factors. Long-term factors ensure that the risk is mitigated, risk is minimized, based on the consistency of numbers. Now, one very important thing to note is valuation is one of the parameters that goes on to define the ultimate call on the company. It is not the only factor. Sometimes people do confuse that, okay, you're saying valuation is here, valuation is very attractive, but we're saying it's not a buy, it's only a hold. So valuation is one of the parameters. Sometimes even an expensive company can be a buy. Because when we're looking at value, when we're looking at the overall call, it involves all the four factors coming together to form the call on the company. Third parameter is the financial trend. Now, financial trend is a momentum parameter. It is a momentum of the result numbers. So what it essentially means is, let me give an example. Let me just take sales. Okay, so in the latest quarter, what is the rate of growth in sales? Is it growing consistently every quarter? What is the rate of change in QOQ growth and YOY growth? What is the rate of change versus its own past, rate of change versus its peers? Then we combine last 2 quarters and say, okay, what is the trend in the last 6 months sales? What is it in the last 9 months sales? What the rest trend in the last 12 months sales? All these numbers only on one factor, which is sales. Financial trend measures similar trend across all the parameters, across the results, the P&L, the balance sheet, the ratios, the cash flows, the shareholding numbers. So all that gets combined to form the financial trend. On the right, you'll also see a correlation graph of the company's financial trend versus its price. Now, going below, when you come down, you'll also see what are the different factors which have triggered because of which either it's a positive or a negative financial trend. And fourth parameter is the technical parameter. Now, technical for us is not a very short term or a very intraday technical. It is slightly long term. So what we're trying to find is the investment trend in the company, not just a intraday stop loss or intraday target price. But technical for us is an enabler. Provided the fundamentals of the company are strong, do we even look at the technicals of the company? Here, Amara Raja is mildly bearish. You can see that it turned in the bearish range at around 7:30 on 25th May, and since then the price is down. So the technical again will take some time to move for us because again we're looking at most of the weekly and monthly parameters and not the very short-term intraday parameters. All these four combine to form the final call on the company. This is what we call the Mojo score. So now coming back, Mojo score is essentially the backbone of everything that we do at MarketsMojo, because basis the Mojo score, all our other products flow in terms of what goes into defining the portfolio or what goes into defining the top rated stocks. Second, and probably our most famous or the most sought after section is the Mojo stocks. Mojo stocks are the top rated stocks at MarketsMojo, basis the score on the company. At any point, there'll be around 40 to 50 stocks in the Mojo stock list. So let me just show you the Mojo stocks where you can find that and what is the information available. So we're going to invest and top Mojo stock picks. The Mojo stock section here, you can see. Sorry. So you will find Mojo stocks across different market caps. So which are the top mid caps, top large caps. So and here you'll also find the return that the stock has generated since it became a Mojo stock. So Mastech has generated 513% return since it got added to the Mojo stock list in the last 13 months. Now this is completely transparent. The day the stock gets added to the Mojo stock list, we start tracking it for you and we'll give you what is the performance. If you go down, you might find the stock, the stock, it's not performed. So it's completely transparent. The day the stock became a Mojo stock, we add it here and we start tracking the performance of that Mojo stock. When a stock becomes a Mojo stock or if there's any addition or deletion from the list, we alert you via emails, via mobile app notification, via this website notification here. You can click on the full list. Now, full list will have complete details. So since the day we started tracking Mojo stocks, if the stock may not be a part of the Mojo stock today also, the entire performance will be listed here. So the ones in black are the ones which are still in Mojo stocks. So Mastech, like we saw, is still a Mojo stock. Saregama recently went out of the Mojo stock list after being there for 9 months. It generated 380% return in the period versus a benchmark of 45%. Now, as I said, this is completely transparent. So you'll also see the ones which have not performed. You can just scroll down. The maximum loss was 18% in a stock. And if you see the number of reds versus the number of greens, far outpace the number of reds, and also in terms of the performance. Now, again, we don't say that there is everything that we say will eventually make profit. No. But if you see, the probability is very high because you can see the numbers here, the performance which happened in the positive versus the negative. There is very, very, vast difference in terms of the performance of the calls. You can click on current list so this is like a card display format. Current list will have a table format. So you can do a lot of sorting here. You can sort by the date of entry, or you can sort by score. You can do all that stuff. Now, one thing that you might have noticed is not every buy and strong buy stock becomes a Mojo stock. For a stock to qualify as one of our highest rated stocks, it has to pass through the quantitative numbers that on its own the stock should be a highly rated stock. It should have a rating of a buy and strong buy. There are some more filters that are applied. Like I said, the quality of the company has to be good or excellent. There are some extreme parameters in the financial trend, technicals, valuation that let's say financial cannot be very negative. There are some liquidity parameters applied on top of it. For example, because we don't want you to get stuck in very liquid stock. So this will apply to maybe small caps and micro caps, where we put some minimum liquidity criteria in the stock in terms of their daily traded volume, average daily traded volume. And also the stock has to be among the top 20 in the market cap in terms of the score. So only the top 20 highly rated mid caps, let's say, will be considered to become part of the Mojo stock. So when the stock is getting added, it has to be in the top 20 in the market cap category for it to be considered as a Mojo stock. So these are the quantitative factors and filters that the stock has to pass through on its own. After all these checks, when the stock comes for an entry, it has to also be vetted by an investment committee. Investment committee is headed by our CIO, Mr. Sunil Damania. So every stock is also vetted by an investment committee, and they look for two things. First is there any corporate governance issue which the numbers are not able to catch? If there's any news or any rumor in the market about some corporate governance issue. Or the second thing that they look for is the resiliency of the business case going forward. So if there's a question on the business case going forward, they might not add this stock. Now they cannot add a stock on their own. Like, if I say I like EBC stock, I cannot add that stock on its own to the Mojo stock. The stock has to be highly rated company. The investment committee can only stop a stock from becoming a Mojo stock. So like we saw, it's the curated list of our top buys in the system. And whenever a stock gets entered or exited, we alert you and we start tracking the performance from that day onwards. This performance we saw. So, just to give you some numbers here, we took out the list of all stocks, the best performing stocks from the BSE 500 in financial year 2021. Out of the 15 top stocks, 4 were Adani Group companies. So, and Adani Group companies do not qualify as good quality because of the domestic mutual fund holding rule that I told you. People have made money, but in our system, they do not come up as a good quality company, and that's why they are never recommended. So if you remove Adani Group companies, out of the 11, 6 stocks were Mojo stocks at different points of time. If you see the bottom 10 stocks in BSE 200, none of the stock was Mojo stock at any point of time. So we were able to catch the winners and we were able to avoid the losers. Mojo stock is a list of top rated stock. Now this list can change because let's say a new, better, highly rated stock comes in, or then the stock flow changes. So the list is dynamic. It will keep updating on itself. But how to really benefit from these top rated stocks? One of the best ways that we find is the model portfolio. So let me take you to a model portfolio, and I will then explain how the entire mechanism works. To go to model portfolio, you can click on invest. Model portfolio. This is what we call zero headache investing. You can create up to 5 model portfolios. So let me generate a new one and show you how this works. Only a simple 3-step process. You enter the amount, select your portfolio, and start. So let's say I want to create a portfolio of 2 lakh rupees. 3 portfolios, they are different in terms of the allocations. Now, like an aggressive portfolio can potentially go up to 40% in small and micro caps, while a conservative portfolio will not go into small and micro caps. This is a more concentrated portfolio with single stock exposure can go up to 15%. Here it will be 10%, and single sector exposure is 40 and 25. So the concentrations and the allocations will define the difference in terms of the portfolio construction. All three portfolios have done much better than the benchmarks. In the last 5 years, the benchmark is up 14%. So all three are different benchmarks, but around 14% return of the benchmarks. While the strategy has given multi-fold return, now this is CAGR, annualized return. These are the absolute returns. All three have done much better than the benchmark. So depending on your comfortable risk appetite, you can choose the portfolio which is right for you. Now, what I want to highlight is every model portfolio is unique. So what I mean by that is this model portfolio is being created right now, basis which are the top stocks at this particular moment. If someone creates a portfolio tomorrow, they might get different stocks, different allocations. So it's every portfolio is unique because, and why this happens. So whenever you're creating a portfolio, we select the best stocks at that point of time. And so it doesn't mean that, if someone comes tomorrow, he gets a different portfolio. It doesn't mean that we'll ask you to sell the stocks that you're holding. As long as the stocks that you hold are good. So it's possible that, let's say, a new highly rated stock comes in, and that's why the new person is getting that stock. But as long as the stocks that you are holding are good, you will continue to monitor them. And whenever change is required in your set of stocks is when we will come back to you and alert you that, okay, now you have to change the stock. So this is a virtual portfolio wherein, like whenever the portfolio gets created, we start tracking it for you. And whenever the change is required, we will alert you by email, mobile app notification, web notification. And the portfolio also will automatically start getting updated with the latest available prices at that point of time. So this portfolio got created. I can save a deal sheet. Deal sheet will, in the Excel sheet, will have details of the quantity, the stock identifier, the price, indicated price, which you can send to your broker directly for execution, or you can use it whenever you're making the trades. Like I said, it's a virtual portfolio, so you cannot edit the prices. This will take the last available prices and update automatically. I would suggest that you create another portfolio in the analyzer section, and you can track the actual portfolio or the actual prices that you got at and what was the virtual portfolio. Why we do that is because let's say we sent you a call and you forgot to update it, or you say, again, a bias comes in and you say, I don't want to buy. If I'm asking to sell HDFC Bank and you say, no, HDFC Bank is a good stock, I don't want to sell it, then your portfolio and the model portfolio will start behaving very differently. So if you're following a model portfolio strategy, please follow it over a long term in a disciplined manner so that your returns and the model portfolio returns are in sync. And then we'll be able to guide you, because if the portfolio diverges, we'll keep updating basis, assuming that you are executing the trades, but you might not be actually executing these trades. Now, portfolio can be different for one, I said, is when you are generating a new portfolio, and two, because of the amount of investment. Let's say someone is putting 2 lakh rupees, their portfolio will be different. But someone is putting 20 lakh rupees, their portfolio can be completely different because of, let's say there is a stock, let's say our top rated stock, the stock price itself is, let's say, 50,000 rupees. So someone who's putting 2 lakh will not get that stock because of the portfolio allocation limits. But if someone is putting 20 lakh rupees, might get that stock. So because of these factors, every portfolio, like I said, is unique. So the portfolio keeps on monitoring it on a 24/7 basis. Whenever there is an exit call, we send the next buy call over the next 1 or 2 days. So we'll tell you what to buy, when to buy, again, and what to sell, when to sell, and what next to buy. All these answers are answered in the model portfolio itself. Now, this is a model portfolio that we created. The start date of this model portfolio was 1st April 2020, and we tracked it till 31st March 2021, which is financial year 2021. In this period, the market was up 78%. So it was after the COVID recovery, the market was very high, 78%. Our model portfolio was 106%. So even much higher than the market. So market was supportive, but the performance of the portfolio was even better. Just to give you another perspective, in financial 21, this is the performance of some of the biggest portfolio management houses in the country. The benchmark Nifty itself was 71% up. And this is the performance of the flagship funds of a lot of PMS's houses. So many even underperformed the market. These PMSs outperformed the market, but if you see MarketsMojo, which is the moderate portfolio, it was better than all these PMS's houses. This is another model portfolio that we created on 31st December 2020. So YTD performance, you can call this. This is as of 6th, so a day before. Market is up 27%. This portfolio is up 51% in the same period. Yes, the last 1 month, it was slight underperformance. But if you see overall 3 months and YTD is almost similar, the performance of the portfolio is much higher than the market. You can see the portfolio is also evenly balanced in terms of the allocations towards sectors and market caps. So model portfolio is if you want to invest new money. But what about managing your own portfolio better? For that, you can use the portfolio optimizer. So you can go to invest and portfolio optimizer. So basis your saved portfolio that you save on the MarketsMojo portal, you can optimize the portfolio better. So if you have multiple portfolios, you can either optimize them all together or you can optimize them individually. So let me take this dummy portfolio, which is around 31 lakhs invested in 16 stocks across 11 sectors. Now, first is the analysis part. So this is analyzing my portfolio and telling you, how much returns I made in my portfolio, what contributed to the returns, so which market cap contributed, which are the sectors that made money for me or lost money for me, which are the stocks that made money or lost money for me. So this is like an analysis of what has happened so far. Portfolio optimizer helps to make a more robust portfolio for you based on two factors or on two main areas. First is the portfolio construction. How well is your portfolio constructed? So this looks at the allocations that you have across different stocks, different sectors, different market caps, and how they all come together for you. Now, for example, these are tail stocks that have very, very small allocation. For example, Aarti Industries, this is the 31 lakh portfolio. Allocation is only 900 rupees. Let's say this was absolutely the right call. The stock becomes a multi-bagger. It becomes 10 times from this level. I will only make another 9,000 rupees. So in a 31 lakh portfolio, 9,000 rupees gain will not make any difference. Although so the first thing was which stock to buy, when to buy. I got both of them right, but how much to buy? I got absolutely wrong. And because of that wrong decision, my returns, will be nothing. I did all the hard work, I identified the right stock, but the allocation, if it is not right, that will completely spoil all the hard work. On the opposite side, in one stock, I've invested 46% in Tata Elxsi. It might be a good stock, but what if there is tomorrow news in the company or there is some development that no one saw coming? The stock will crash, and with that, my portfolio value will also crash. So over allocation makes your portfolio unnecessarily risky, and under allocation hampers the returns in the portfolio. Now coming to the stock selection, the second important part. Now this, are you invested in the right stocks? So, what is the quality of the company that you invest in? What is the valuation of the companies? So for example, these two qualities of companies are below average quality in the portfolio. This is the risk profile of the portfolio, not your risk profile of the portfolio that has been uploaded. You can always modify it. So it says it's an aggressive portfolio because 46% is just one stock. So I can make it moderate and go ahead. Now, this is giving an overall action plan of the portfolio of what broadly I need to change in my portfolio in terms of number of stocks, market cap allocation, stock allocation. And this is how I actually achieve this. Now, these are the stocks that I can continue to hold. This one stock, Tata Elxsi, which we saw was 46%, I need to trim. It's a good stock, but I need to trim the holding. By how much? We're saying currently I hold 300. I have to sell 213 shares and I'll be left with 87. I can always edit this. It's a completely DIY tool. You can edit any suggestions. And these are the stocks that I need to get out of. Now this is completely, you have the choice to modify. I can, let's say I don't want to sell this, I want to trim this. I can drag and drop it here and put the quantity, or I can continue with it being in sell. This one stock where I was holding very small quantities of good stock, I have to increase the shares. Now this is saying when we started, we had a 66% allocation to large cap, which has come down to 37. We'll take it up back to 50%. And this is how we achieve it. So we'll give you multiple options. You can choose any. These are all highly rated from the same pool of Mojo stocks and model portfolio. You'll get the portfolio suggestions. So let's say I can select any two here. I want to select any one mid cap and any two small caps. So this is the entire portfolio that we have created. There might be some cash remaining because of the stock prices. So now the new portfolio is 50% large cap, almost 30% mid cap and 20% small cap. 16 stocks remain. Number of stocks was fine, but if you see the allocations now, this is only 13%, and I've also added a few new stocks. And again, a deal sheet will get generated. You can download this deal sheet and send it to your broker or use it for execution. One important thing that people ask, so whenever a portfolio is whenever a stock is part of your portfolio or your watch list, we will send you alerts on any price sensitive information. So if let's say the results are out or the call on the stock has changed, we'll come and alert you. Ideally, at that point of time, you should come and optimize your portfolio and check. Or we suggest that you come at least once a month and just check your portfolio and optimize it once to see if everything is fine, all the allocations are in line. So portfolio optimizer is for your existing stocks, how to make your existing stock portfolio better. The last section I want to talk about is the switcher section. Now we saw portfolio optimizer will optimize your entire portfolio together. If you're looking for only stock to stock switching option, you can use a switcher. So you can go to research and switcher. Here you can put the stock that you want to switch. So it might be part of a portfolio or any stock that you're looking for a better stock in place of this stock. So let's say and I have 200 shares. This will give you option to switch across. If there are higher rated stocks in the sector, it will also have an option to switch within the sector. In this sector, there are no better stocks. There are no buy rated stocks, and that's why it's not giving that option. It's saying you can go either across small caps or across the market. So if I hold 200 shares of Kaya, the system is telling me get out of Kaya and put in 118 shares of GNA Axle. Now you can download this report. This is a real-time research report that gets generated when you push this button, or you can even send it to yourself in email. This is a switch report. So this report will have details of why to switch out of Kaya and why to get into GNA Axis. So let me download this report. You'll also find other options if you want to go across the market. And what are your other options like Vedanta or Dr. Lal Paslams? So this is the report that got generated. Why exit Kaya? Because flat results, risky valuation, weak fundamentals. On the other hand, GN Axel has high management efficiency, outstanding results, bullish technical trends. This is switch report. It's a comparative report of what's not working in Kaya and what is working for GN Axels. You can see details of each factor, what is not working for Kaya, and what are the positive developments in GN Axis because of which you can consider switching. So it's a stock to stock switcher. It gives very pointed reason of why to get out of this and why to get into the other one, and it'll give you options if better stocks in sector available than sector, or across market cap, or across the entire market. Now, this is what I was telling you about earlier. How is the portfolio created? First, the stock on its own has to be highly rated across the long-term and short-term parameters and the overall score. Then each stock has to pass through the investment committee filter, where there's also a level of qualitative analysis. Once the stock becomes part of the pool is the same of Mojo Stock's model portfolio or switcher or portfolio optimizer recommendations. Once the stock becomes part of this pool, then the portfolio creation becomes automatic in terms of the overall contours. So we've just defined that, okay, what is the maximum level that aggressive portfolio can go to, moderate can go to, the system will automatically pick up. Now, when I say it can go up to 40% in small caps, the aggressive portfolio, it doesn't mean it will always be 40% in small caps. If the market currently is favoring mid caps, it will have a higher mid cap allocation. Tomorrow, if let's say the small caps start doing well, it will move to small caps. It might even move to large caps. So it has all the flexibility once you define the contours within which it can be. The approach, again, what we want to emphasize is unbiased, unemotional, disciplined, and process driven. Brief credentials of MarketsMojo. We are a SEBI registered investment advisor. We use a big data analysis engine to rate all 4,000 companies. The fintech startup MarketsMojo was started by the ex-founders of Money Control. So they came back together 6 years ago. So they had different careers after Money Control, and they came back again 6 years ago, and they started MarketsMojo. One important thing that I want to highlight, before we move forward, for our recommendations and for our calls, there is no fixed holding period. So we don't say, okay, now it's become buy, it's buy for the next 3 months. There is no fixed holding period. The stock call can reverse within days, or it can be the same call for a long period. For example, when we saw the Mojo stock section, you'll see some calls which were there for 10 months, 7 months. Some will even have closed within days, right? 11 days only, 22 days. So if the call is not right, again, unbiased approach, we will close the call if anything has changed. So there is no fixed holding period. There is no target price. There is no stop loss. As long as the stock is fundamentally strong, is technically supported, we will continue to remain, we have a buy or strong buy rating. Anything changes will be unemotional, and the stock call will update automatically. Just few stats of the market. Whenever you've seen a big fall, after that the market has rebounded very sharply, and that has followed a period of sustained performance for a few years. We saw here market did fall a lot. We've seen the first big recovery, and we're seeing the continued trend also here. In all these approaches, the stock selection becomes paramount. You have to be invested in the right stocks. We had a very live example, live testing of our IP during the COVID meltdown. Our portfolios also fell. They did not fall as much as the market. The drawdown was not as severe. They also fell, but not as high as the market. But when the market rebounded, so when the market fell, there was a higher churn. We were able to get into stocks which were looking great even at that price level. And when the market rebounded, our portfolios gave much higher than the benchmark, because with the tailwind, when the market sentiment was good, we were able to get into stocks which were poised at that point, and then the performance since then has been fantastic. So in all these markets, whenever there was a fall and when the market goes up, which gets followed by a sustained period of good performance, you need to have the right stock selection. Before we open the floor for Q&A, I just want to mention that only for the users who are with us on the webinar, we are offering a very special subscription price. Now, this offer is going to close very soon and the prices are increasing. So if you're thinking of subscribing to Markets Mojo, please do so. The current 5-year subscription on Markets Mojo website is around 1.5 lakh rupees. Only for people who are in the webinar, we are offering a very special rate of 49,995 plus 180 days. So you get 5.5 years at 49,995. Plus you'll get 3 exclusive Markets Mojo t-shirts like the one I'm wearing today. All the upcoming features will be part of your Mojo Professional subscription. If you are already a Mojo Professional subscriber, your subscription gets extended by 5.5 years. So if you have, let's say, 1 year remaining, you'll have 6.5 years remaining if you go for this offer. If you're not a subscriber, I'm telling you the prices are increasing and you will not find these prices in the near future. If you're not going, you don't want to go for a 5-year plan, we also have a very special 2-year rate. Again, the price on the site is around 60,000 rupees, but only for you, you'll get it at 19,999 for 2 years and 3 months. So, there is another added benefit of 3 months on top of the high discount that you're getting. So if you're thinking of subscribing, please do so because these prices are going to change very, very soon. For the benefit of everyone, we'll put the links in the chat box and we'll also email you these links after the webinar is over. With that, I'll open the floor for Q&A.
Yeah, I've dropped both the links in the chat box. Going forward, the questions. This question is by Mr. Lakshmi. It says that, hi Karan, irrespective of investing through model portfolio, if someone follows buy of only Mojo stocks and hold until it's a Mojo stock and sell it immediately once it's out of the Mojo stock list, do you think this strategy will give more return than the model portfolio?
This is a good strategy, but the only thing you have to be cognizant of is it's a high churn strategy, right? So you have to give it more time. So we recommend model portfolio for people who do not have a lot of time, who cannot monitor it on a day-to-day basis. So in model portfolio, you will get maybe 1 or 2 sell calls in a month, and accordingly buy calls. So it's not a very high involvement kind of product, but this is a very high involvement. So if you have the time that you can give that amount of time, you can monitor it on a daily basis of which stocks are coming in, which stocks going out, then even this is a very good strategy. But what you have to be cognizant of is in model portfolio, there is a fixed capital, like you put in 5 lakh rupees and then you can increase it. But let's say you have a fixed pot of 5 lakh rupees. Here, the amount can be different, right? Because there might be 3 stocks that come in one day, 1 stock that goes out, then 4 stocks come in, 7 stocks go out. So your amount will not remain fixed. So if you have the capacity to keep putting in even extra money, and when the money comes out, then you kind of sitting on that. If you can do that, then you can go for this strategy. And both strategies will give you equally good returns. This will be a little more higher churn, higher involvement strategy, while model portfolio is already looking at that and it will tell you when to exit and what to buy next.
Okay, Mr. Manoj Shah is a bit upset on the top this question on the YouTube chat. He's saying that it's been 40 days since his investment and he's made an investment in the model portfolio, but around 8 shares are currently running in red, and he's a bit worried about this. So do you have anything to say about it?
So first, 40 days is a very, very short time to evaluate any equity market product. You have to be invested for a longer time. In the short time, because of market movement, the stocks can go up or down, but you have to be patient. You have to invest in a disciplined manner over a long term to realize returns from the equity market. If a stock is part of the model portfolio, we are monitoring it very closely, and if there's any change, we'll come back to you. The last 1 month, especially, what has happened is, we saw this big fall in small caps and stocks which had done well until then point, even if it's not small cap. Why this happened was the market got very jittery, and wherever there was a lot of big profit booking move that we saw without anything happening with the fundamentals of the company, because there was a high profit booking in the market. People thought, okay, whichever stocks have gone up, let me just take out my money, and that is what happened in the market. And the Mojo stocks which had done very well till that point in time, they also got it. So we've seen that last 1 month, our portfolios did underperform. I've been very upfront with you; they did underperform, but we are confident that what we are telling you is to buy good quality stocks for a long term, and we are monitoring these stocks. So you have to be patient. with equity markets, you have to give it time. And if you're comparing it to the market and you say, okay, market is up, Nifty is up in this point of time, but why is my portfolio down? If you see the distribution of the market, even BSE 500, if you see, almost 70% of the stocks were down in this period. Only a few stocks were dragging the entire market up, which is not a sustainable. It's not a picture of what is happening in the actual market. So the market was very wobbly, very jittery in the last 1 month, which now we've seen improving again. The sentiment is again coming back. So please be invested. Follow the suggestions in a disciplined manner over a long-term period, and you should see your performance improving going forward. But again, you have to have a long-term horizon for anything in equity markets.
Okay. Moving on to the next question. So a lot of investors are a bit confused on the limit of portfolios. They want to know, can we create 5 portfolios, 10 model portfolios, so on and so forth?
So the saved portfolios, you can create 5 saved portfolios and you can create 5 model portfolios. So in all 10, but in each subscription, you are restricted to 5 model portfolios only. So model portfolios and portfolios run independently. So the portfolio section, here you can create up to 5 saved portfolios which you have actually invested in. And in model portfolios, you can create 5 model portfolios. Like we created one today. If you have to delete a portfolio and create a new one, you can just simply click on this and delete. And this portfolio, a new portfolio, you'll have space for another portfolio. But be very careful when you're deleting a portfolio or a model portfolio, because once deleted, we cannot get it back.
Okay, and Karan, one of the investors wants you to actually analyze the stock NMDC. He wants you to take him across the 4 dots and your opinion.
So NMDC is one of the highest rated stocks. It's a Mojo stock. It has been a Mojo stock for 2 months. Why it's a Mojo stock? The quality of the company is good. It's a green quality company. All factors are positive here. Valuation is fair. So looking at the fundamentals and the price, it's a fairly valued company. The financial trend is outstanding in the company. So, the numbers have been very good. The financial trend has been outstanding. And technically, the stock is mildly bullish. But, I think where the concern is coming from is the stock has underperformed. If I go to returns, now we know that in 1 month period, while the market is up by 7%, the stock is down 15%. And because of this, if you see the technicals of the company are also deteriorating, from it used to be bullish, it became bullish at 93 rupees. So it used to be very bullish till here, but now it has started coming down. So having said that, we are monitoring this stock. And if there is any change in our call, we will come back to you and tell you that, okay, maybe the call on the company has changed. But as of now, where things stand today, the company is still a Mojo stock. It is still rated a buy in our system with a score of 80. Sorry, strong buy in our system with a score of 80. All the parameters are positive. The technical is starting to become negative, but it still has not deteriorated so much that we will have a concern and tell you, okay, now you have to exit. But having said that, we are monitoring the stock. If any change happens to the Mojo stock status, we will come back and update you.
Okay, moving on to the next question. Sachin has this question. Do all strong buy qualify as Mojo stocks? If not, how to choose strong buys to buy which are apart from the model portfolio? Example.
So I did briefly touch upon this, that not all buy stocks will be Mojo stocks. And the reason for that is every stock, when to become a part of the Mojo stock or to become part of the recommended basket, has to meet the criteria of the score. Plus, the quality of the company has to be good. There are some liquidity parameters that the stock has to go through. That has to satisfy. There are the stock has to be within the top 20 highest rated stocks in the market cap. Also, every stock has to go through our investment committee review, which is a qualitative assessment headed by our CIO, Mr. Sunil Lamania. They will look at on 2 factors, which is first is the corporate governance. If there is any news of corporate governance issue in the company, or if the business case going forward does not look very positive, only in these two cases can they reject a stock becoming a Mojo stock. Now, if you have to, so that's why the stocks that you see on the Mojo stock list not only have highly rated parameters, but they've also passed through the investment committee filter of qualitative assessment, and that's why we are very confident on these stocks that you see on the Mojo stock section. From the Mojo stock pool of 40, 50 stocks, your model portfolio of 10, 15 stocks will be created. And rest of the stocks you can still monitor in the Mojo stock section. So when you go to the Mojo stock section, you can still see in the current list, you can still see all the other stocks which are there, which may not be part of the model portfolio.
Okay, a question which is come in Hindi. मुझे स्टॉक खरीदने समय स्टॉप लॉस लगाना चाहिए क्या?
सर, जैसे मैंने बताया कि हमारे एनालिसिस में हम लोग ना फिक्स पीरियड होता है, ना टारगेट प्राइस होता है, ना स्टॉप लॉस होता है. हम लोग मॉनिटर कर रहे हैं स्टॉक को उसके आज के बेसिस पे कि आज वो स्टॉक कैसा है, बेसिस जो भी इंफॉर्मेशन हमारे पास अवेलेबल है इन टर्म्स ऑफ द नंबर्स, इन टर्म्स ऑफ द प्राइस मूवमेंट, उसकी बेसिस पे आज उसका एनालिसिस अगर हमें पॉजिटिव लग रहा है, स्टॉक विल बी हाईली रेटेड. बट आपका जब आप इन्वेस्ट कर रहे हो, यू कैन ऑलवेज पुट अ स्टॉप लॉस, यू कैन ऑलवेज हैव योर ओन इंटरनल पैरामीटर्स ऑफ टारगेट प्राइसेस, बट हम अपनी तरफ से कभी भी टारगेट प्राइस और स्टॉप लॉस नहीं देते. अगर स्टॉक अच्छा है हमारी रेटिंग के हिसाब से, हम बोलते रहेंगे कि वो अच्छा है. जैसे ही अगर उसमें कुछ चेंज होता है, हम आपको बताएंगे कि अब उसका रेटिंग चेंज हो गया, यू कैन गेट आउट ऑफ द स्टॉक एंड व्हिच आर द नेक्स्ट अवेलेबल ऑप्शन फॉर इट.
Okay, and a question by Mr. Naren. How to make the best use of Screener? Could you give a short demo? I have subscribed recently, but I'm not aware of it.
Sure. Screener. There are three kinds of screeners on MarketsMojo. First is the investment idea. So these are pre-created 18 investment ideas. For example, there are high dividend yield companies, high and growing companies, companies turning around their performance. So let's say, look at this one. We'll also find what is the explanation of how this was created. And you can also see the stocks, so Tata Steel or Andhra Petrochem, which become part of this. So high and growing is basically companies which were doing well have done even better this time. So like this, there are different kinds of investment ideas already calculated in the pre-created screener area. Second is the Mojo Logic screener, which I personally use. It's very simple to use. So it gives me opportunity to screen across the 4 key dot parameters of quality. So let's say I want a company which is at least a good quality. Valuation should be at least fair. Financial trend should be only very positive. Technical should be absolutely bullish. And I want let's say, mid-cap company. So only these 3 companies qualify for this. So like this, you can build your own screens based on the 4 key dot parameters, and on top of that, you can overlay the market cap and industry parameters. You can always save any of the screen that you create and come back to it later. Third is the Mojo Expert Screener. So here you can also add a lot of parameters on which are many fundamental parameters, return related parameters to create your own model. For example, let's say I want quality should be at least this. Technicals overall should be bullish. The underlying parameters of technical, let's say MACD weekly, should also be bullish. On top of that, I want to customize that the return in this year should be at least 50%. The company should have a profit growth in the last 1 year of at least 20%. I'm just putting different numbers here. The valuation, let's say the valuation factor, the P of the company should not be more than 20. So I can build my own model using this analysis. So these are the 14 companies which qualify for this. Again, you can save this and you will come back to it. So if you are looking for already created ideas or a simple screener, or you have something already in mind about how your model should look like, you can use any of these screens.
It's a question by Neha. She actually wants your idea on. She has 2 model portfolios, both aggressive. I have 9 lakhs extra which I want to invest in my personal portfolio. I wish to invest in FMCG, aluminum and cement. I have finalized HUL and Hindalco, but cannot decide on the cement stock. I wish to invest in a large cap cement stock. Can you please guide what to do here?
Let's go to the screener. So, okay, let's say you want a large cap and you want a cement company. There are 8 cement large cap companies. Out of this, let's say that we put filters of quality and valuation. So only Grasim is coming. So that kind of makes it easy. So Grasim has all 3 dots green. Grasim is also a Mojo stock with a score of 84. All 4 dots actually are green. It's done very well till now. YTD is up 70%. So the stock is absolutely bullish. Became bullish at 670 rupees. So stock, all 4 dots checked, right? So Grasim looks a good bet. But you can use the screener to identify all these kinds of opportunities.
Again, this question by one of the investors, I just invested around 5 lakhs in my portfolio. How much would it be after 5 years according to the model portfolio strategy? Do you have any opinion on this?
Future performance, no one can guarantee any future performance. If there is someone who comes and tell you, I guarantee so much return or your return will come so much, please run away from that person. No one can guarantee any returns in equity markets. What we can show you is what has happened till now, which is available on the website, like I showed you just now. What we are trying to do is we are trying to suggest the highest rated stocks, which fundamentally and technically look good. And we hope they will beat the benchmark in the future. But no one can assure you of any performance in equity market because it can be very volatile. Stocks can go up, stocks can go down. From our side, we're doing the best of picking the right stocks, but you never know in the market. So no one can guarantee any performance.
Okay, and Mr. Rajesh has asked that if he can gift the 5-year offer to his friend, if that's possible.
So you can do that if you want to risk this. So we do not encourage, but if you want to do it, you can do it. The only thing is there are only very limited slots which are left for these offers. So, if you send to someone, then slots for you and the remaining people in the webinar get reduced. But, there are limited slots. If you want to gift it, please do at the earliest because these offers will not be there for a long time. So, if you want to do it, please do it. But please ensure that you hurry because the prices will increase in the very near future.
Okay, question by an anonymous attendee. He's asked a question on score and Mojo stocks. We noticed that a few stocks with higher score are not a Mojo stock, while the other ones with a lower score can become a Mojo stock. So I feel score is not the primary criteria since score is derived from your 4 dots. Example, Industrial with a score of 74 is not a Mojo stock. However, Orient Electric with a score of 71 is a Mojo stock.
Yes, correct. Like I mentioned, that not all buys and strong buys will be Mojo stocks. Because for Mojo stocks, when a stock has to become Mojo stock, there are some quantitative factors that stock has to pass through, like liquidity, quality, all these things. There is also an investment committee review, and they can stop a stock from becoming a Mojo stock. So they cannot add a stock on their own, but if a stock is coming on its own to become a Mojo stock, they have the power to stop it from going ahead. So yes, there is based on the quantitative factors, it has to come up, and then the investment committee can take a call of not including a stock in the Mojo stock list. So the primary criteria always remains the score. These are on top of that, there are some additional filters and additional approval kind of criteria, basically which a stock becomes a Mojo stock.
Okay, a question by Mr. Vivek from the YouTube chat is that current, can there be a screener with only technical bullish signal?
So you can build the screen. You can go to, if you want to find stocks which are all technically bullish, this is your list. And you can then put filters like market cap, like if you want only large caps or only mid caps, you can always do that. So purely technical, or you can also build on technicals, a much refined filter, like the technical on its own is bullish. The internal parameter, let's say, moving average also is bullish. So, you can even fine tune it further. The MACD weekly is also bullish. So you can keep creating these kind of, sorry, I didn't put the bullish. So you can, keep creating this kind of even further filters and you can come out with the list.
Okay, a question from the YouTube chat by Mr. Vishwa. He's saying that have you tied up with any brokers have you tied up with any brokers?
No, we do not have any broker types on MarketsMojo. We have relationship with brokers in terms of we power their content. So a few leading brokers, we do provide our research to them, which they in turn will showcase to their clients on their websites. But we do not have any tie-up with the broker for, let's say, trade execution or anything.
Okay, just a follow-up question by Mr. Vivek on the technical bullish screener. He's saying, can we have a screener on the day that it happens?
Okay, no, unfortunately, that is not available right now. But it's a very interesting suggestion, and we'll definitely take it up. But right now, it's only the current grade that you can filter on.
Okay, and Mr. Sam has this question that you'd spoken about a model portfolio for mutual funds. Is that ready yet, and when can we expect that?
It's unfortunately not ready yet. Whenever we are creating a new product, it has to go through multiple levels of backtesting and simulation. So we are still working on it. It's still not ready, but this is one of the projects that we have taken up, and hopefully in the next quarter we'll be able to launch this.
Okay, a question by Mr. RK. What is the return of some of the worst performed portfolios created in the year 2016? For example, stocks like Saregama, Mastec, and Laurus Labs, which have given multiple returns, may not necessarily be part of every model portfolio. Hence, how will you make sure that every portfolio will outperform if some of the great stocks are not part of certain model portfolios?
So what we do, sir, is in our weekly investment committee reviews, we monitor the performance of portfolios created every month. So every month we see how many portfolios, let's say, were created in the month of April, and what is the maximum and minimum performance of the portfolios. Out of, let's say, 100 portfolios, what percentage of portfolios are outperforming, what percentage of portfolios are underperforming, how many are positive, how many are negative. So this gives us, a good perspective of what's happening across the different periods. And if we find some anomalies, like, let's say, our usual rate, for example, I'm giving you, let's say we've seen that in the last 6 months, 80% of the portfolios are positive, but in this one particular month, only 40% of the portfolios are positive. Then we look at that month portfolios more minutely. So, let's say the Saregama stocks might not have been there. There might be some stocks which were there, which are not doing well. So then we'll even do another level of check there, and we see, okay, now what is the distribution, what is the breakup of these portfolios, and why these portfolios are not doing well. So we monitor each portfolio, each group of portfolios very minutely to see the pockets of outperformance and the pockets of underperformance. So learning from the outperformance pockets and applying it to the underperformance pockets to see how we can improve the overall performance. I do not have the numbers readily available with me right now of what is the minimum return and maximum, but this is something that we do monitor on a very regular basis.
Okay, question by Mr. Jacob. He wants to know regarding Infinub. Once I take the subscription, how do we add investments? Is it in INR or Forex, foreign exchange?
So in InfinHub, you will get access to 20 different markets. So we recently launched another website, InfinHub. So if you click here, it's a different flag. If you click on any flag, you'll be redirected to InfinHub. There you will find research across 20 different markets. There also you can create model portfolios across US, and we have some 5-6 country model portfolios. We are also adding more and more countries there. Again, so we do not provide execution in Infinum also. So whoever you are working with, so a lot of brokers in India have now started giving the option of investing abroad, like ICICI, HDFC, even the new age brokers like Grow. They all have tied up with people who are providing access to invest in either US markets or global markets, through which you can invest, and there'll be so there. But you have to follow that. If you're an Indian resident, then you have to do the LRS route, and you can invest up to 250,000 dollars abroad. So you have to go through that regulation part, and there are some brokers in India who are doing that. You can transfer money from India to abroad, or if you have a foreign bank account, you can use that directly and invest through that account.
Okay, Karan, that's it with the Q&A session.
Thank you very much for joining us today, and we'll again post these links in the chat box and also send it to you by email. These prices, I want to reiterate, are going up very soon. So if you are thinking when subscribing, please do so at the earliest.
Yeah, I've dropped the links. Also, I'll just take one quick question. Deepak, you asked how can you gift a subscription to someone? I would suggest you could just register with his email, make the payment, and then pass him the credentials. If you still have any queries, you could drop a feedback, and I'll help you do the same. But as Karan rightly mentioned, the slots for the 5 years and 2 years are closing shortly, and we are actually changing the prices on website. The team is working on that. So if you would like to extend, I think this is the best chance and the last day to kind of extend your subscriptions. I'm also dropping another link in the chat box for the upcoming webinars. We do have a power series today. Our CEO and founder, Dr. Mohit Batra, and our Chief Investment Officer, Mr. Sunil Damania, would be there to take your questions. If I missed any question or couldn't take up any question, you'll come for the power series event, and we would be taking your questions there as well. So looking forward to seeing you all for the power series